Welcome to the Transparent FX Academy. In this video, I'll speak about EURUSD. And as usual, to keep the video as educational as possible, first, I'll cover the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is essentially what the big players in the market are doing and how they're moving and shifting their orders, which is what you see right here. By the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. So without further ado, let's jump straight into it. Starting here from the monthly time frame, what we can see is that we have a market which at the moment is testing a quite strong monthly supply and resistance area. In fact, what we know is that from here, all these previous rejections to the upside were created. Every time the market tested this zone, it respected the area as support and rejected the zone to the upside. Right now, what we can see is that the market has entered again inside of the exact same level of previous demand and support, which is now supply and resistance, and has already respected the level once with this monthly rejection to the downside. And right now, the market is testing the exact same zone once again. So there is a good probability to see again the market respect this area as monthly supply and resistance and create a rejection to the downside. Dropping down on the weekly time frame, what do we see? Now, from a weekly standpoint, the situation is quite clear. We can, first of all, notice a perfect inversion from a weekly bearish trend to a weekly bullish trend. In fact, we went from the creation of weekly lower lows and lower highs to now the creation of weekly higher highs and higher lows. And right now, what we can see is that this uptrend is slowly starting to crack, because we can notice how already the market has managed to create a series of lower lows. We had the first correction here. The market tried going higher, it failed and rejected lower, creating a lower low. Right now, the market seems to be heading again towards the previous highs, where again, the market already twice created rejections to the downside. So the market already failed in creating higher highs when it reached this zone already two times. And right now, the market seems to be approaching this area once more, which is already the zone that we have previously identified on the monthly time frame as supply and resistance. So there is good probability of seeing institutional shorting inside of this zone. And we will be speaking about the institutional positioning in just a few moments when we move to the commitment of traders analysis and look at the data precisely for EURUSD. But for now, let's keep all of this in mind and drop down on the daily time frame. Now, from a daily perspective, the situation is very clear. I spoke about EURUSD just a few days ago after the market had created this W formation, and I explained all the reasons for which I was expecting this rejection lower and completion of the W formation at the neckline. So to see the market from here to create this push to the downside right here. And that is exactly what the market did. And by the way, I will link in description that previous analysis so you can go and check it out for more free education. But at the moment, what do we have? Well, before we dig deeper into the technicals here, first, let's go and see what we have when it comes to the commitment of traders. So what the big players in the market are doing precisely on the euro. The first thing to keep in mind is that if we are looking at the data for the euro, we are already looking at EURUSD because all currencies on the spot are traded against the USD. And what we can see here is that with the last reports, net positions have been decreased. We went from 128.2k net positions all the way down to 115.4k net positions. So we have seen a clear decrease in the net positioning, showing how institutions are now starting to move back to the bearish side for the euro. And since all currencies on the spot are traded against the USD, they're moving to the bearish side for EURUSD. So let's keep all of this in mind and move back to the chart. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find linked in the description, so you never miss new updates. Now back to the analysis. Now here in the daily time frame, the most important zone is this one here. We can clearly identify this area as supply and resistance also here in the daily time frame, because this is the area from which the two previous rejections to the downside that we have already identified originated from. Especially the last rejection to the downside was very, very aggressive, showing strong institutional selling when the market reached this level. Right now, it seems like the market has good momentum to reach this zone again, because remember that strong liquidity areas act as magnets for the price, because the market wants to go and test what kind of liquidity there is inside of a zone. So if the market will now go and reach this level, there is a good probability to see even more institutional shorting of EURUSD and the market to potentially reject lower. So if the market will reach this area, what would I expect? Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily time frames combined with the COT data, those are the best time frames when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best time frames for that are the intraday time frames, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bullish to bearish market, I wouldn't be surprised to see a potential rejection to the downside for the market to move away from this supply and resistance zone fueled by institutional shorting. That definitely wouldn't surprise me. Now, all this free education and analysis that you see me share here on YouTube is actually just the tip of the iceberg. In fact, if you want to learn more, I really suggest that you go over to the Transparent FX Trading website, which you find linked in the description. And here you will have the possibility to gain access to all my courses, which range from the very basics of trading to the more advanced topics like building automated trading systems, building a portfolio of strategies, uncorrelated strategies, and much, much more using quantitative finance tools like the Quant Analyzer. So it's really something that you cannot afford to miss. You also have the possibility to gain access to my trading station software with the Telegram notifications integrations, one-on-one mentoring directly with me for any questions you have along the way, the COT data software, which you often see me use here on my YouTube videos. The program is also an all-in-one program, so you gain access to everything immediately, including all my strategies and EAs, and you also gain access to my entertaining trading show in which I share all my trades as they're happening. Here, you will see the presentation of each and every one of my strategies with the full historical backtest and presentations of the rules of the strategy. You also, as we were speaking about, have access to the live trading show. So essentially, every trade that is taken on my live account is automatically shown here in a very entertaining fashion as they're happening. So opened, closed, managed, so you can learn even more. And as you scroll down, you will see that you have the possibility to join and gain automatically access with the email and password that you will create during the registration process. So again, I really suggest you go and check it out. The link is in the description, and I will see you on your student dashboard. If you enjoyed the video, make sure that you leave a like. Also, let me know in the comments below any new pairs that you would like me to cover in my next videos. Subscribe to the channel so you never miss new updates, and I will see you in my next video.